Pancakes or waffles?
Cookies.
Cookies. So I'm doing another company review today. I'm gonna go after USB, which is US Bancorp. It's a banking company. It does everything finance really. So I'm gonna do a little bit of a dive on it. At a first glance, I like the company. Fairly familiar with how the numbers go in these type of companies. Thankfully, it's not an ADR, so I'm gonna have a clear picture through the website I use, which is stockanalysis.com. And we're gonna look at some bar charts. We're gonna look at some graphs, some numbers, some ratios, and figure out whether I like the company right now or not. And hopefully that gives you some perspective on what you're looking at. So first, let's actually start with the overview. I'm gonna zoom out just a little bit because actually I can just go like this. I can just unlock and move it a little bit. All right, perfect. So, Bancorp, just at a first glance here, you can see it has a market cap of $78 billion. It's a bank. Um, so, that's about the description you need. There's a little bit about the company. It's involved in all kinds of banking transaction businesses, everything from mortgages to like wealth management, to corporate support, etc. And you can also have a checking account where you can get a bank card just like Wells Fargo or Bank of America. In case you guys are not familiar, I think they mostly operate in the west side of the United States, if I'm not mistaken. So some of you guys on the East Coast may have never heard of it. Who knows? This is the first thing I like to look at here on the bottom right, which is their revenue in the blue line and their earnings in the green line. So if you scroll over, you can actually see the exact numbers. So it looks like the revenue in 2021, $24 million, and they earned about $8 million. Which is a good ratio. It's good margins there. So next thing I like to do is go into their financials, and more importantly, the income statements here. And I like to look at the graphs because it's more visual. I'm kind of a visual guy, so looks like they had a dip in 2020, but other than 2020 and their strong recovery in 2021, the revenue growth for this company was fairly steady. It looks like they dipped from 2012 to 2013 a little bit, but other than that, it's been a steady climb upwards by a small amount percentage wise, but nevertheless growth. You can see the revenue growth year over year here. Definitely got a little mixed up here over the last 2 years, but 2020-21 more than made up for the decline in 2020. So the next line I like to look at is operating income. So that looks like it's fairly flat, and then a familiar looking bar chart of the last 2 years. Moving on down, next important metrics is the shares outstanding, and you can see that they've actually, I think you can, let me see, yeah, you can see they've actually been buying back shares very, very predictably over the last 10 years. That tells me that they're really serious about returning capital back to the investors at a very predictable rate, which is, I think, a huge asset to have as an investor is predictability. So I commend them on that. I think that's great. And in fact, they're also given a dividend. So they're returning money to shareholders in two different ways. One, they're making each share more valuable by decreasing their amount. So if you hold 100 shares today, the percentage of the company that you will own next year is going to be higher just by holding on to your shares. So that's cool. Also, you can even reinvest your dividend to hold an even greater amount of shares. Profit margin, here are the margins. It looks like operating margin 43. I mean, they're really high margins. So it's to be expected from a business like that. Next thing we're going to go here is statistics. So you can see that the market cap of the company was 78 billion, enterprise value 87. That means they're holding to about what is that? 9.5 billion of debt. If my math is correct. Let's take a look at their balance sheet real quick. Yeah, I was close. So 9.67, you can see net cash position here. But again, as always, a lot the way that cash is looked at in a lot of companies is different, like what they consider cash. So there's cash equivalents and of all sorts. So you got to do a deep dive to find out exactly what that breakdown of the debt is and what they consider cash or not. Although the banks in the United States are pretty standard when it comes to their accounting, but if you're looking at banks abroad, try not to get caught off guard by what one bank considers cash and what one doesn't. So moving on, the PE ratio is put up at about 11.3. Price to sales 3.38. Okay, so EV to sale to earnings is about 12.7. So not bad. So looking at the dividend, we can actually go to a dividend tab. It looks like it's about 3.43%, which is very solid, especially for a US like banking company. I don't think they have decreased it. Well, they may have, but it looks like the dividend growth is about 7% per year. The payout ratio is 38.7. What that means is that what portion of the profits they pay out as dividend, 40% is almost approaching high, except if it wasn't for the predictability of the company. Because they're so predictable and because the income flows are so measured from quarter to quarter and year to year, despite the last couple of years, a company like that can afford a very high payout ratio. So, if you look at a company like Apple or something, their payout ratio is like 10% or something small, but 40% is not horrible. It looks like they've been increasing their dividends steadily for a while now. Scrolling all the way back down to June of 2012, it was 19.5 cents, and now it's steadily increased all the way up to 46 cents per share. Plus the graph that you saw of buying back shares, that's pretty massive return on capital actually. I mean, return to shareholders. So I like that they're doing that. They're supporting the stock price in the process with these buybacks, and let's take a look at that while we're at it. This is the 1 day, 5 day, 1 month, year to date. Not too bad. 1 year, 5 year max. So there is a slow increase in price value. A lot of companies nowadays, they want to manipulate their price so it doesn't tick down with all this return of capital to the shareholders. So they'll do some kind of maneuvers to support the share price. And Apple's doing the same thing, and so is apparently USBancorp. So I like that. I like that they really have the shareholders in mind. And an entity like a mature bank like that, I think it's good to have that as a focus. Now, moving on, just reading through the news, it gives me a good idea of what they're trying to do as a company. For now, most of the news revolves around attending different seminars and discussions and events around the globe, which is fine. But one thing that kind of caught my eye is that they're acquiring fintech companies. More specifically, they acquired, it looks like, this is the news item that I really liked. Not this one where it takes them longer to merge with something, but what was it called? Something X. Liquid X. So I like this headline 2 weeks ago. U.S. bank partners with Liquid X to fast track supply chain transactions. So that tells me a few things, right? Number one, just to show you the headline, that tells me a few things. Number one, that they care about being at the cutting edge of banking, right? So they're acquiring fintech companies, which is great. I think if you can't expand and grow through internal innovation, you need to acquire it and get the talent from those fintech companies. So I think that's awesome. And number two, I like that they're talking about supply chain issues and payments. So that means that they have their finger on the trigger when it comes to global needs, right? They're looking to serve what is hot right now. They're willing to adapt and try to take a stab at it. Even if they're unsuccessful, banks are traditionally really slow with current events, but at least they're trying to make a go at it and try to solve global and local problems, which currently happen to be supply chains. So I like that they're attacking that. It's really good. So overall, I would say that I have a really positive opinion now that I'm looking through this bank. Um, I do realize they kind of have limitations when it comes. It's going to be a struggle just to compete with the other big banks over the long term, unless they do something really incredible. So I do realize that, and that is partially the reason why their growth looks like what it looks like, which is this here, right? Their revenue growth looks like this, which is very slow growth over time, and their operating income looks about the same, even slower growth if you kind of average it out. So there's a reason to do that. There's a lot of competition, but I do like that they're fighting and they're steady. So I think I wouldn't mind owning this company. If I didn't think that I had better ways to deploy the cash, I would probably own this as a really safe, like baseline dividend paying, ownership increasing bet in the account. So I think it's a really good kind of maybe even diversification. If you're if you have a bunch of businesses from other sectors, US Bank would not be a bad bet to hold for the next 5, 10, or even just 1 year. I think it'd just be great, but even longer. So what price would I get it at? Well, let me look. Let's go to the price chart again. I'd say it's probably worth around. It's buyable up until buyable. Is that a word? It's buyable around up to $60. I think after that I'd probably wait and not really be interested. But anything under $60, I think, in my opinion, it's worth buying. So it was all the way under 50 at one point, it looks like, and now it's kind of rebounded a little bit. But I would not be afraid to buy it because just even if the price stays flat, which it might, even if the price stays flat for the next few years, I know I'm gonna get plenty of return through the dividend side of the equation. And if things get heated up, then I'm gonna get return on the equity side, equity like principal side of the equation. So I'm really not afraid of losing capital holding money in that position. So I'd say overall positive rating, buy up until $60. If you own it, I wouldn't be too scared. All right, that's it for this company. Good luck to all the holders. Peace out.